I'd like to welcome all the students that are joining us for tonight's UVA Spring Finance Night. We'll be starting here in a few minutes. I'd like to thank all the students that are joining us tonight. We'll be starting here in a few minutes, or 1 minute. Good evening and welcome to tonight's UVA Spring Finance Night. I'd like to give a big thank you to our company partners for joining us this evening late in the afternoon on a beautiful, beautiful spring day. So we appreciate them taking time to present to you about the field of finance. I'd also like to thank all of our partners on this event, which this is a partnership with all of our offices across UVA, including in our McIntyre School of Commerce, the Career Eco, and also special thanks to the business community here in the Career Center for all of their work on this event, and the Employer Relations team for putting this together. My name is David Lipinski. I'm Director of Employer Relations and Experiential Education here in the Career Center. We want to thank you for taking time out of your evening, as students, to be here, to learn about the event, to learn about finance. This is an event where you can ask questions. We want you to learn as much as you can. Don't be afraid to ask questions about the field so you can be more prepared as you start to go into the summer and into future recruiting opportunities. With that, I'd like to invite and introduce Meg Saunders, who's a member of our business career community here in the Career Center, who's going to say a few words.
Hi students, my name is Meg Saunders and I'm an Assistant Director for Business and Technology in the UVA Career Center. Just echoing David, I wanted to take this time to thank the employers for being here, the Career Center staff that worked so hard to pull off this event, and you for being here to further your career. Please send me, and I've already posted this, but send me a private message on chat with your computing ID. I will use this to virtually check you into the event, which will then give me the ability to follow up with any resources and share your name with the employers in attendance. Additionally, if you are interested in this event, then you may be interested in an event being held by McIntyre, which is this Saturday from 9 a.m. to 3 p.m. I will comment the handshake link in the chat, which will give you more information. Space is limited with this event, so sign up ASAP. And yes, it is a finance-specific event. Lastly, but definitely not the least, we at the Career Center are offering virtual appointments from noon to 5 p.m. each day. If you are an international student and this schedule doesn't work for you, then please just reach out to the Career Center at virginia.edu email, and we will schedule a separate time for you to accommodate your daily schedule. But for all other students, you can sign up for an appointment on Handshake just as you would an in-person appointment with us when you're on grounds. So go ahead, meet with us. We'd love to help you kind of further your experience and your education during this time of virtual recruiting and virtual learning. So we hope to see you soon. David, I'm going to hand it back to you.
Thank you, Meg. Thank you very much. And I hope I mentioned this here at the beginning. I wanted to really kind of open with this as well, students. I hope that everybody is safe and healthy. This is definitely unprecedented times. This event was designed to be here on grounds. You know, we miss having you here. A couple of us are here broadcasting this from a career office, and it's just not the same being on grounds without you. So we can't wait until we're back to normal, and we can't wait till we can see you here for live programming, you know, for this. So I want to give a big thank you to Clearsight Advisors as our sponsor, you know, for making this event possible. Again, we were going to be in person. We were going to have some food for you. So that when you're here, come by the career, get you something next time. And then the other presentations this evening, we're going to be from Coleman Research, Real Term, and UVIMCO. Each of our presenting organizations has been given a prompt that will help better educate you about the areas in finance. And then we're going to have opportunity for Q&A at the end. So please submit your questions through the Q&A button on the bottom of your toolbar. We're going to record those questions, and then we'll have Q&A after all the presentations conclude. So with that, I'd like to hand this off to Alex Johnston and Jonathan Holland at Clearsight Advisors, and thank them again for being here. Thank you again for sponsoring.
Awesome. Hopefully everyone can see my screen, and thanks for the introduction, David. Definitely going to take you up on that food offer the next time I am back on grounds. Hello everyone. We definitely want to thank you for taking the time to attend virtually here. We know it can't be easy with everything getting all shuffled up, everything going on this semester. So we're definitely happy, you know, to be presenting to you regardless today. By way of introductions, my name is Jonathan Holland. I'm a first-year analyst at Clearsight Advisors, and I'm going to be basically acting as your UVA point person. So after the presentation, you know, later this semester or early next semester, please don't hesitate to reach out to me with any questions you have regarding the recruitment process or where Clearsight stands in that. Always happy to hop on the phone or kind of discuss. I am joined today by two of my colleagues, Will Welland, who's also an analyst at Clearsight with me, and Alex Johnston, a director at the firm. We are going to be discussing at a high level our prompt, which is basically kind of the different types and nuances of the different types of investment banks, from a bulge bracket to, you know, middle market to kind of more of a boutique investment bank, which is what Clearsight is. Go over kind of what you can expect as an analyst at an investment bank, and kind of how the recruitment process looks for us and kind of what we're looking for. That being said, I'm going to kick it off to Alex, who is going to start the presentation here.
Thanks, Jonathan, and good evening, everyone. I think we're certainly excited to be here. And as Jonathan mentioned, you know, given the prompt and, you know, our reaction to this is that, you know, investment banking and kind of finance in general is a pretty complex, sophisticated ecosystem, and there's a richness to the world that is, you know, hard to appreciate unless you're kind of living it day to day. You know, but for the purposes of tonight's finance night, you know, wanted to start a bit broader and kind of provide a framework for you to kind of think about, you know, what an investment bank is and kind of how a firm like Clearsight would fit into that ecosystem. So the next few slides are somewhat illustrative, intended to kind of make the point and provide a framework rather than you know, be scientifically accurate. But I'll just start by saying that in its purest form, an investment bank provides a connection between sources and uses of capital. The bank serves both investor clients, such as, you know, endowments, pensions, et cetera, who are the supply of capital and demand investment securities, and issuer clients who supply investment securities and demand capital. The investor client side is the public side of an investment bank and is principally represented by the sales and trading and research operations. The issuer side is the private side of the investment bank and typically represented by the corporate finance division. Middle office and operations facilitate the exchange between those two sides of the house. And when people use the term investment banker, they're generally referring to the professionals in the corporate finance division who interact with issuer clients such as corporates and governments. Within corporate finance, there are many products such as debt, equity, and M&A. M&A is core to many investment banks because M&A transactions are often complex and require outside capital such as debt or equity. These events can be catalysts for additional products offered by the bank. The largest firms, bulge brackets, aim to be comprehensive in their services and provide many functions to large enterprise clients who demand many services. The number of truly comprehensive platforms is somewhat limited. Investment banks with more selective offerings that serve a client market requiring less comprehensive services are generally known as middle market firms. The strategic choices regarding which products to offer dictate their strategy and focus. A couple of variations are represented here. These figures are for illustrative purposes only and just kind of illustrate that some middle market firms tend to be more equity focused, some to be more debt focused. And understand that there is a gradient here in that, distinctions between what is bulge bracket versus middle market, versus boutique are not always so discrete. Continuing down this pathway, boutique firms are further selective and offer a single product, sometimes multiple products, but generally a single product, which is most commonly M&A, because M&A services do not require significant, capital. You don't need a bank balance sheet that a sales and trading operation might require in order to operate such a business. And another dimension of strategy selection is sector focused. The most comprehensive bulge bracket firms attempt to serve clients across all industries. As firms become more focused, they often become selective on a smaller piece of the overall economy, focusing on clients in certain verticals such as consumer or healthcare, rather than all sectors at the same time. Next slide, please. As such, different strategies exist, and the market is rich with firms that operate under different models. Firms tend to separate themselves based on the breadth of both services / product and client need. There is also some correlation with size, as well as large global companies require more services than small private ones. Nonetheless, there are boutiques such as Lazard and Evercore that serve the large cap market with a limited service offering, and other full service firms such as SunTrust and Oppenheimer that provide a broader array of services to smaller mid-market clients. You see where Clearsight is represented there, serving, kind of a more focused area of the market with limited needs, with a more focused array of services. And I'm going to hand it back over to Jonathan to kind of walk you through what is Clearsight, what makes Clearsight special, and kind of what is our strategy for success in a crowded marketplace.
Awesome, thanks, Alex. So before getting into our, function and industry, I want to kind of touch on Clearsight. As a company from a higher level, the company was founded in 2011 by a handful of partners. It's grown rapidly since then. It's about, I'd say, like 30 professionals now, from analyst up to partner or managing director. We had 3 offices previously, in a pretty big step for Clearsight. We actually just recently opened a New York City office that's located actually just south of Central Park. So to kind of get back to what Alex was alluding to, we're a boutique investment bank. And because of that, and to kind of differentiate ourselves, as Alex was saying, we are, hyper-focused in a specific kind of industry set, as well as our function, basically function being kind of what we provide, like what service we provide to clients. And for us, that service is M&A. So mergers and acquisitions, and primarily on the sell side. And basically what this means, and kind of a good way to think about this, is that we basically work with, or our client would be kind of a business founder or entrepreneur that's basically looking to sell their business or find an investor to partner with to help them, grow or scale up their business. And kind of getting back to the coverage area, we like to say that we focus on the intersection of professional services, data and analytics, and software. So if you were to kind of randomly pick one of our clients, one of our active clients right now, they're definitely going to have at least kind of two of these characteristics, if not all three. And to kind of further put our client base into perspective, you can kind of look on the right side of this slide here, and this is kind of a select strategic buyer set. And some of these names should look familiar, and we've closed deals with a few of these names kind of since the conception of the company. So Bain should look familiar, McKinsey. We've closed a few deals with Deloitte and EY, IBM, and Salesforce. So kind of taking into consideration kind of what we do and our industry focus, these are the types of firms that would be interested in those. And also, keep in mind that this is just kind of a small subset, as Alex was alluding to earlier, kind of more so for illustrative purposes. So what could you expect kind of if you decide to go this route as an analyst at an investment bank? I'm going to get into that, but I kind of want to take a step back and kind of look at the structure of kind of a stereotypical deal team. So at a bank, you're probably going to have positions that go from analyst to managing director. In the role that goes from a VP to an MD, they're more so going to be focused on origination, which basically means that they're sourcing the deals for the company. They're leveraging their network of connections that they've kind of developed over the course of their life as an investment banker, or whatever other industries they were working in. And they're using those connections to drive new business to the firm. Analyst to VP, that's kind of more focused on executing, kind of creating important deliverables, liaising with the client and the buyers, and really doing whatever you can do to kind of push the deal forward and get it to a close. That being said, as we've said, Clearsight is a boutique bank, and I think that's kind of an advantage in certain ways from an analyst perspective, because it really does give you the opportunity to flex upwards in certain instances and take more responsibility than at another potentially larger bank, because the deal structures aren't as rigid. There's definitely a little bit of flexibility. For an analyst specifically, so for Will and I, for example, since we're both analysts, our primary responsibilities, as this says, is it's really revolves around creating and executing on deliverables, and that's pretty broad. So that includes creating compelling pitch materials for someone we hope will become a client, and digging into the data to try to figure out what their unique value proposition is and what nuances of their business would drive a premium valuation. So this next thing is probably a little bit more aligned with what you would think an analyst does, and that is dissecting Excel sheets and financial statements to build valuations or three-statement models, and also using other data that they provide to try to pull out different insights about the business that a potential buyer would find exciting. So another critical role of an analyst is we in a way function as kind of like a gatekeeper of the data. And to kind of provide an example of what that means, if I was on a deal with Alex and he asked me, Jonathan, do we have or has the client shared with us kind of any revenue by customer data? Theoretically, I should be able to answer him immediately and kind of be able to say, yes, we do. No, we don't have it. And if we do, kind of know off the cuff, what is the customer concentration? What customer is their top client? How much revenue is allocated towards that customer? Kind of fundamentally knowing what the important pieces of the data that we have are is a great way for an analyst to, add value to the deal team. And I think another big role of an analyst, and what, makes ClearSight special is, we are constantly liaising between the client, our individual teams, and the buyers. It's not uncommon for ClearSight analysts, even within the first few months of working, to jump on, we're on all the client calls, but to physically jump in with these C-suite executives and provide color on our analysis, or kind of what insights we thought that it uncovered and how we think it could be used to position the company. So I hope that was helpful. Those are kind of some of the responsibilities of an analyst. I'm going to pass it off to Will, who is going to take you through kind of what a day in the life is like.
Thanks, Jonathan. So yeah, just to kind of build off what Jonathan said first, the analyst is primarily responsible for execution of the deal process and kind of the day-to-day services that ClearSight offers to clients, and making sure that they can serve as that touch point for anybody in not only the deal team but the firm to know what's going on with any work stream that could be going on. There's a lot of different things that run concurrently in any given deal process, and a lot of different data that flies around. So being able to kind of have a status on any of those at any given point is really important for the firm to kind of function. So just to kind of give you, I know that sounds pretty complicated and kind of vague, but to give you kind of a good idea of what the day-to-day workings of an analyst are, we've kind of provided this, it's basically an example of what a day could be. By no means is any day the same in our job. I'm sure Jonathan or I could tell you, every day is a new and exciting challenge, but just to give you a good idea, we've kind of provided this. So to walk you through it, basically, I'd say I arrive at work around 9 a.m. every day, kind of check my email, make sure nothing's super urgent before probably grabbing a cup of coffee with some other analysts. I think it's kind of like a nice way to start out the day, to get kind of a walk in, a social activity, and, a jolt of caffeine. And then, your morning will usually be either having a meeting with the deal team, a senior team member, or, being on a client call to kind of discuss something, one of the work streams that you're working on, or how to best pull together some data for a presentation, and kind of like organizing a plan on that front. Usually you'll grab lunch around noon or 1 with other analysts who are available, another opportunity to kind of stretch your legs, get out of the office, and have kind of a social activity. In the afternoon, you'll usually work on the items that you discussed in the morning during any meeting, or working on something that you need to turn before tomorrow morning, before kind of, either running to the gym around 6 or just grabbing dinner with whoever's free around 7. And then usually you'll end up, kind of cleaning out your inbox, making sure that there's no additional things that you need to complete before the next morning, just so that you can end the day usually around 8:30, 9 with kind of a clear conscience, and make sure that, nothing is left behind. To kind of talk about, we have these 2 quotes from 2 of our fellow analysts that kind of talk about what a day in the life is like. I think that, what they both are speaking to is that at any given time, during any day, during, an analyst's life, there are multiple different deadlines, multiple different work streams that are happening kind of concurrently. And the analyst has to be able to, not only be a touch point for the rest of the firm on those, but to manage just their own time and to manage their own work streams in order to complete everything in a timely manner, to make sure that the client receives, the highest level of service. And so the firm really relies on analysts to be not only detail oriented, but kind of willing to jump in and be hardworking and get their hands dirty, in order to kind of make sure that everything can come together for clients and for a deal process. So, as you think about recruiting and what kind of ClearSight would be looking for, or an investment bank would be looking for in an analyst, those are kind of the most important qualities, I'd say. Jonathan, Alex, feel free to add if you disagree. But yeah, so as you kind of think about careers going forward, recruiting in the fall, that's kind of what investment banking, the role of an investment banking analyst is like, and what we're really looking for. So just to kind of discuss the recruiting process, here we can move to the next slide. Yeah, here are all of our kind of contact information. If you have any questions about, I know that was kind of a brief summary of, investment banking, ClearSight, the analyst role. If you have any questions on any of those 3 items, don't hesitate to reach out to any of us. We're all available. Jonathan is your, recruiting captain for UVA, so don't hesitate to reach out to him about any UVA recruiting events. I believe, last year for recruiting, we did an info session in the fall. We were at Fall Finance Night, and then we had on-grounds interviews for interns and full-time analysts. And so I believe we'll probably be doing those 4 events as well this coming fall. Crossing our fingers that it won't be virtual, but yeah, so that's kind of what the recruiting process looks like. Unless, yeah, Jonathan, Alex, feel free to chime in if you have anything to add.
No, that was great, Will. Thanks. And yeah, just definitely to reiterate, we're always happy to have a conversation, hop on the phone, and kind of discuss more about investment banking, how ClearSight works, the different nuances there, and just kind of answer, any questions you have. Thanks for watching, and thanks for being attentive, everyone.
Alex, Jonathan, Will, thank you so much. We really appreciate that opening. Great introduction to the night, and I'd like to now hand it over to Ricky and Luke over at RealTerm. So Ricky Sabalt and Luke Kurtz. So you guys can take the screen.
Hey guys, can you hear me?
Yes, sounds good.
Awesome.
How's it going, guys? I'm James. I'm actually filling in for Ricky today. We had to get called off on a last-minute call, so stepping in here.
Yeah. So first off, thanks, David. We're really excited to be here, and just to echo everyone's sentiment. Obviously, wish this was in person, and but still excited nonetheless. So my name is Luke Kurtz. I'm a first-year analyst on the West Coast Investments team for RealTerm. And our presentation will be a little bit different. We're going to kind of just tell you about who we are and what we do, and we hope that our presentation can be half as informative of the guys that came before us. So without further ado, we're RealTerm Logistics. We're a real estate private equity owner and operator. I know that's a lot of buzzwords right out of the gate, but private equity meaning a couple of our founders raise some institutional capital, and we invest in a specific strategy. Our strategy is we buy logistics buildings. So pretty much you can think of it as when you buy a package on Amazon, we hope that package will go through a series of buildings that we own. So just diving in here. So our specific strategy we call high flow through real estate. And that can come in a lot of different ways. It could come through real estate on airport, which is the fund James works on, or I'm on the logistics side. So truck terminals, final mile warehouses, like the big ones you see driving up to New York, ultimately getting, you can see on the right, to a retailer, to your own house, or ultimately to another warehouse. James, you want to add anything there?
Yeah, so I mean, similar to what Luke said, we look to get around densely populated areas, and we're kind of we don't store goods for a long time. We want them to move in and out of our facilities very quickly. And that kind of works better with this new Amazon model of people wanting their goods next day delivery, same day delivery, etc.
So just some more stuff that we buy. On the right, the bigger buildings that sometimes store, but are still moving in quickly. But what we really like on the fund I'm on is the top left. So those skinny buildings with a lot of dock doors. You have stuff coming in from ports and airports, and we want to get it through our building as fast as it can to get to you. So just to kind of reiterate what we said so far is we're the owner and operator of these buildings. So we raise the capital to buy it. Our investment team decides it's a good idea for whatever reason. And then we also manage that property. So to hit on one of the first buzzwords I said, vertically integrated. We're raising the capital ourselves. We're deploying it ourselves. We're managing the asset. And then ultimately we can decide to keep or sell that asset and give our investors returns. So we'll just dive into some of the different investment, or this is probably actually a better place to go. So across our transportation platform, you can really think of it as three big buckets. So we have real-term logistics, which is those truck terminals that you saw 2 slides ago. We have our airport business, and then we also have Indospace, which is larger warehouses in India. James, do you want to hit on Aeroterm?
Yeah, so Aeroterm's the largest owner of on-airport real estate in the world, or in North America. And basically, we either buy plots of land and build the building ourselves, or buy building from an already existing tenant at the airport. But the principle is planes will land with cargo from all over the world. We unload it into our facilities, and then it's shipped out through a distribution center from there. But where we can what makes it different is when you deal with on-airport property, you're dealing with the government, different tenants, different FAA regulations, so it's very specialized, and that's kind of where our market knowledge and specialization allows us to differentiate from the pack. There's only it's a super niche business. There's probably only 4 or 5 direct competitors. So our ability to know a little bit more how to navigate tricky situations allows us to put our clients, either the users like FedEx, DHL, or Amazon, or an airline, in a better position than they would be if they would just go by themselves or under airport's control.
Yeah, and I think that sentiment, which is what our prompt was, how does deep knowledge come into play for a private equity firm? I think even on our side, granted, the Aeroterm business, I think is a lot more complicated in some ways in dealing with all sorts of different legislation and bureaucracy. But you could see under the assets under management, we're just a little bit over $5 billion across all our platforms. And when we're competing with some huge private equity firms, we really pride ourselves on being more dynamic than them and really knowing more about the specific deal. So whereas Blackstone may be trying to buy a big portfolio, we really try to target certain deals. Not that we don't buy portfolios, but we like to be as specific as we can and pride ourselves on the deep industry knowledge of what we're doing, as we are fairly specific. So on our team at the top of the slide, you can see we have a 100-person shared services team. So on each of these funds at the bottom, you'll have the investment team, which is going out, sourcing, and pitching, and ultimately buying and pursuing the different strategies that we laid out. But that top portion of the slide, the shared services, they work across all the different platforms. So our marketing department works across all of them. Capital markets is raising money for each fund. So we think this integration really helps us. And there's a lot of times where there's crossover. So FedEx will be doing a deal on airport, and then they'll come over and talk to us about where they think the puck is moving for the next deal. And we really think that this kind of network effect helps all platforms. So as we were talking about, these are the different funds we have. We have the Real Term Logistics Fund, RLF, which is a value-added fund, close-ended in nature, meaning investors will give us money for the fund. We'll go out and try to buy properties we think will increase in value, fix them up, lease them up, whatever we have to do to add value, and then ultimately we'll have a liquidity event, which we sell that portfolio. RLIF is our open-ended fund, so you can think of that as a private REIT. So investors will buy in, but they can also trade out of the fund. There's no liquidity event generally. We just raised a European fund, which is also that close-ended sort of structure. And then as James discussed, we have the airport business on the far right. So just to give you kind of an idea of the HFT and what we're talking about, you can see that when product comes in, they really have to move through a lot of different things to ultimately get to you. So we really enjoy discussing and finding out where that product is moving and try to strategically acquire properties that, one, help the consumer get their stuff quicker and also help the users move it more efficiently. So I think generally you may hear private equity being discussed in unfavorable ways, but what we really think that we are benefiting everyone, and we try to be responsible stewards of a built environment and add value for everybody. So this is just an example of a building that we'd buy. So right next to New York City, ton of dock doors, you can see, makes it really easy to move product, and also has that excess trailer parking, so trucks can move and they're not running into each other. So I think there's certain aspects of our business that are fairly complicated, but at the end of the day, it's just finding buildings, at least on the investment side, that we think help all the parties we discussed involved. James, you want to take this one?
Sure. So on the logistics side, it's more primarily acquisitions work and buying existing buildings. However, on the airport side, it's a lot of development work. So we'll work with users or airports looking to expand their cargo operation. This is an example that we did at Chicago O'Hare. It's the largest development in the past decade. It's a $200 million investment that we put up, and since its delivery, cargo volumes at Chicago O'Hare have increased about 20%. That's good for the local economy. It's good for the airport itself. And of course, it's good for our users. So it's kind of a prime example of how our developments can help bring an overall economic good to the community and the users itself.
Yeah, and that's a great point. And just lastly, we'll discuss, I think we've sent out our recruitment flyer, but just a quick pitch, similar to the presentation before us. We are a smaller team relative to some of the big banks and other PE firms you'll hear about. So you get to kind of take on a pretty significant amount of responsibility fairly early in your career. On the logistics side, we probably have 10 or 12 analysts. And what we are responsible for is sourcing deals, underwriting them, and then ultimately helping to present them to our investment committee. Industrial real estate often trades off market. So you'll hear instances of an analyst calling a building owner and they'll end up selling, and it's a $100 million transaction. And I think that's something that's fairly unique at Real Term, where you get a lot of responsibility and you really get to take on as much as you want. So apologies if I went over there, but thank you for listening.
Thanks, guys. Appreciate it.
Thank you, guys. We really appreciate that. All right, moving on to our next presentation is going to be with Francesca Bragan and Aaron Tipping from Coleman Research. And Coleman is in a unique place in how they support, through research, investment banks, private equity, and investment managers, all that are represented on the call. So with that, I'd like to hand it over to our team from Coleman.
Awesome. Thank you so much, David, for the opportunity here. Welcome, everybody. Thanks for taking some time out of your evenings, especially with how crazy things have been recently, to listen to ourselves and some of these other organizations. So like David mentioned, my name is Aaron Tipping. I am a recruiter with Coleman Research. I am based in Raleigh, North Carolina, so not crazy far from campus. And really the purpose of my part of this presentation is to discuss Coleman Research, because as David mentioned, admittedly, we are in a bit of a kind of a niche market within the finance and investment space. We don't really act as a consulting firm or an investment bank. We do things a little bit differently. So I want to focus a little bit on what it is that we do, how we get to that point, what we accomplish as an organization, and then I will kick it over to my colleague Francesca, who will handle more of the PE side of the business and how that works. So just kind of kick things off, who are we and what do we do? So a term that's thrown around a lot in our business is our expertise is finding expertise. In order to kind of get to that point and to explain it, we're what's broadly known as a global expert networking firm. So we provide a lot of leading, and these could be private equity firms, consulting firms, hedge funds, even some corporate clients. We provide them the opportunity to, be able to speak to a lot of industry leading subject matter experts. So the way that this operates is clients will come to us, and they've already admittedly done a lot of research and due diligence into various industry sectors. If you've done any research on, investment firms or consulting firms, they're either working on behalf of an end client, or they are, looking to learn about whether it's something related to the healthcare space or the retail space or, industrials manufacturing, the energy space, whatever it might be. They are constantly doing their own research and due diligence to understand, is this a good time to make these various investments? Is it a good time to purchase this company or invest in this startup venture? And we act as really a partnership with those firms. So we have client management teams across the US, based here in Raleigh, New York, Boston, San Francisco, and most recently Los Angeles, as well as locations in London and Hong Kong that are working with a lot of these top tier clients to provide them with answers to some of these questions they still have. So they might come to us towards the end of their venture, the end of the research they're doing, with some gaps, with some questions they still have related to the particular market, the particular space that they're looking to potentially invest in. So the way that we go about it is we have these large client management teams working with these established books of business that are working directly with these clients. They're building relationships. And we then long-term, based on what our clients are looking for, are going to go out and actually source industry-leading subject matter experts in those fields. So it's really a way for the clients to gain necessary information. But on the other side of it, as a leading subject matter expert, whether it's a former engineer at Tesla or somebody that used to work as a high-level executive for an oil and gas company, these are experts that have a lot of knowledge that they're able to share with our client base. And in order to get on these calls, they go through very rigorous compliance training and are actually compensated an hourly rate for their time. So long-term, like I mentioned, they're coming to us kind of towards the end of what they're looking to accomplish. And the job of a client management analyst, and I'd like to spend a little bit of time here in a little bit going over some of the opportunities that we have heading into this summer. But our client management analysts, these are new grads that are looking to gain more insights in the financial services space, but are also looking to learn about a lot of these different clients, because you are working on a very close-knit team that's working with an established book of business, whether that's on the consulting side, whether it's on the PE or hedge fund side. So really building relationships with these folks, and getting to the point where they know that they can come to us whenever they have these research requests. And then from there, honing in on a lot of different skills, whether that be sourcing and recruiting industry experts, having those conversations, doing a lot of in-depth research into a wide variety of different projects, different insights, whether that is, working directly to manage these clients. If you're interested in eventually moving into more of the investment or consulting side, this is definitely a great place to start. But ultimately, we are, kind of doing this service and coming at it from a bit of a different angle to help our clients make these long-term investment decisions. Francesca, you can go to the next slide. Awesome. So a little bit about our global clients. We do have a lot of relationships with some of these leading investment firms. We also boast a 90+% retention rate with a lot of these investment and consulting clients. So expert networking is one of those industries that has been around not a terribly long time. We've been around as a firm since 2003. It's pretty standard with a lot of these other competitors in the space, but we have seen quite a lot of growth just within the past couple of years within a lot of our different product offerings, not just one-on-one, kind of intimate phone consultations between experts and clients, but we have a hosted events telecast product. We have a new ERM SaaS product called Coleman Exchange that we've been pitching to a lot of our clients. We have a market research survey product. So a lot of clients, they do see the value in this and being able to work with, expert networking providers like Coleman to get the rest of the information that they need. So we work with 8 of the 10 largest hedge funds. Francesca is going to speak in a little bit about the private equity side, but we work with 15 of the top 20 PE firms, a lot of the top mutual funds, asset management firms, and then actually 9 of the 10 largest consulting firms as well. So before I kick it over to Francesca, like I mentioned, we have a lot of client management positions open. A lot of our growth potential right now is sitting here in Raleigh, North Carolina, as well as a lot of our West Coast books, like I mentioned, Los Angeles and San Francisco. And then our Northeast offices are in New York and Boston. So if you're interested in learning a little bit more about just some of the opportunities we have heading into June and July as a client management analyst, feel free to reach out to myself or Francesca. We're posted on Handshake, LinkedIn, our website, colemanrg.com. Feel free to reach out or provide any questions to us here at the end of the presentation. And with that being said, I will kick it over to Francesca Bragan, who will focus in a little bit more on the PE side of things.
Hey everyone, like Aaron said, you can find all our information there, but I'll also go an extra step further, and what I'll do is I'll post both of our emails and contact information for you so that in the chat, so that if you want to reach out to us, you can do that as well. So like Aaron mentioned, I'm gonna chat with you guys about how we service private equity specifically. The prompt we were given was, how does our firm specifically support the work of investment firms and private equity? So we figured it might be a good idea to kind of take a step back and remind you all what private equity is and what they do. And primarily, private equity comes from institutional investors and accredited investors who can really dedicate a substantial sum of money for extended time periods. So in most cases, these considerably long holdings, 3 to 5 years, are often required for private equity investments. So in order to ensure a turnaround for a distressed company, or maybe enable liquidity for events such as an initial public offering or a sale to a public company in general. Since the 70s, I would say that private equity has really strengthened readily. Pools of funds are sometimes created by private equity firms in order to really privatize an extra large company, or a lot of them will do what's known as a leveraged buyout, and really they operate in a variety of different ways. So like you can see on the slide, they're really engaging in buyouts of public companies. They're working to help provide liquidity for people to scale and grow, but it's traditionally private money and not publicly traded. So when we're talking about different strategies, repackaging is really going to be when a private equity firm is going to take a public firm private and purchase all of the stock and leverage loans and really work to dress up the company and bring it to the public again at a later time via an IPO. Again, we could also just see a public to private and see it stay private for the indefinitely. And then we also will see potential platforms and add-ons. So maybe a private equity company has a great portfolio of companies, but is really looking to find something to fill in a gap. What they'll do is they'll purchase a company to maybe package and create a new company. And then again, growth. So you have a smaller company that is doing great work, and the private equity company is really interested in what they're doing. They just need scale. So what's going to happen is the private equity company will invest so that they can grow and scale. And how we help, this is kind of what it looks like from our end. So through the life of a private equity company, traditionally, there's going to be a deal sourcing period, a pre-diligence period, a full due diligence, and then the portfolio management after the acquisition or purchase has been made. So we assist in the deal sourcing. So maybe they're just looking broadly at an industry. We'll help them run industry research on some of the major competitors, some of the smaller players in the space. When it comes to pre-deal diligence and they're developing kind of an industry map and the meeting and working on that as well. Where we do most of our work is the full due diligence. So once kind of a deal has been opened up and is available, they have to move very quickly to learn as much as they can to decide if they're going to make that investment or not, or put in a bid. So that's where we come in primarily. We do a lot of the diligence on the company, on the competitors, what they're uniquely bringing to the office, etc. So what's really great about that is we're able to provide those different experts, and we're able to provide those different perspectives that give them the day-to-day boots on the ground experience, because these private equity clients and these investment clients in general are really good at forecasting and modeling and working to decide if this is going to be a good idea, but they may not know everything there is to know about, let's say, a healthcare company or a new alternative energy company. And so that's where we're able to come in and give them access to vice presidents and executives that can really give them the ins and outs of an industry and the intangibles that they may not be able to find in any report or on paper. So yeah, that's really where we're at. Let's see.
Awesome. Thank you so much, Francesca. We really appreciate you guys doing that and walking through the connections. I think it's a perfect connection to the other firms that we've already connected to. And with that, I'd like to hand over the next presentation to Caitlin Fitzmaurice over at UVIMCO.
Great, thanks, David. There we go. Nice to meet everyone virtually. My name is Caitlin Fitzmaurice. I'm one of the managing directors at the University of Virginia Investment Management Company, or UVIMCO. I co-head our venture capital and growth equity portfolios and also head up our recruiting efforts. UVIMCO is a little bit different in the finance world. So I wanted to start by just giving you a quick overview of who we are and what we do, and then we'll get into the recruiting part. For those of you who haven't heard of us, UVIMCO is the group that invests UVA's endowment. We invest on behalf of both Maine University and all of its associated organizations like the Athletic Foundation, the Alumni Association. We pool all of the assets into one portfolio and manage it as one pool that we call the long-term pool, which as of our last fiscal year was about $9.6 billion in value. So it's a very, very large endowment that UVA has. It's one of the top 5 of all public institutions in the US. We invest across all asset classes, but mostly through external funds, which is what our team focuses a lot of our efforts on. Our goal over the long term is to generate investment returns that exceed both the spending rate of UVA as well as the current inflation rate. And if we can meet that goal, then we will generate enough money for UVA to spend currently, but then also preserve the purchasing power of the endowment over time. So in terms of our overall investment strategy, our goal obviously is to generate, great long-term returns for the university. And there are kind of three main ways that we try to do that. The first is through asset allocation decisions, or what types of assets we're going to invest in. The second is by choosing the particular funds that we're going to invest in. And then the third is by opportunistic or kind of tactical tilts in the portfolio. So an example of that is we currently have an overweight position in emerging markets because we think that's a really interesting long-term investment opportunity. Our overall investment philosophy is that we're very focused on the long term because UVA is very focused on the long term. We believe in active management. So we think that we can beat the market if we partner with the best active funds in the world. We have a global flexible mandate. So our opportunity set is really any investment globally, and we evaluate and manage risk, but we do not seek to avoid it. So at the highest level, in terms of how we manage the portfolio, it starts with our asset allocation. And so we have a target asset allocation that is set each year with UVA and our board, UVIMCO's board. And so that current asset allocation is 65% equities, 10% real assets, and 25% fixed income. So that is the kind of highest level benchmark and risk level that we manage the portfolio to. But our actual portfolio looks vastly different than that. And that's the pie chart on the bottom here. So within that 65% equity bucket, we are investing with long only public equity managers. We're investing in long short equity hedge funds, traditional private equity buyout funds, and then venture capital funds and late stage growth equity funds, which is the part of the portfolio that I run. And then within our fixed income portfolio, we're investing in things like US Treasury bonds, but then also corporate credit funds and marketable alternative funds. So it's a vastly different portfolio, kind of under the hood at the highest level. The next level down from asset allocation is really manager selection, and this is where our investment team spends most of our time. Our jobs are to find, evaluate, and really build long-term partnerships with the best investment managers in the world. And what we're looking for in these particular managers and funds differs a little bit across asset class, but at the highest level, we're looking for people that have some sort of sustainable competitive advantage, that have a very fundamentally driven research process, that we can understand how they're generating their returns, whose interests are aligned with ours, and obviously people that demonstrate a very high level of ethics and integrity. The prompt that we were given was to kind of explain how we're different from the sell side. And I think it's also important to kind of understand our role within the buy side. So as Claire kind of talked about earlier on the sell side, investment banks are really advising companies on raising capital, on going public, on various M&A transactions. They're also producing obviously market and stock research and things like that. The buy side generally kind of encompasses all of the funds that are investing in stocks and bonds and all of the different financial instruments that are out there. Our role on the buy side is really to find the best funds and buy side firms that we can across all different asset classes and invest part of UVA's endowment with them in order to generate hopefully really great long-term returns. So we're kind of the money behind the funds on the buy side, which is a little bit different thing to understand. And in terms of what it's like to work at UVIMCO, a day in the life of our analysts and associates can be very varied. But the highest level things that they're focused on are working across various asset classes to help on our manager due diligence, which is both quantitatively and qualitatively trying to evaluate those funds that we're potentially going to invest in. They get to sit in on the investment committee, which is a really great learning opportunity starting out, right out of college. And then also kind of helping out with ongoing thematic research, and different things that we're focused on. So day to day, this is things like keeping up with the markets, helping to track what's going on in our existing portfolios, understanding individual companies and positions, how they fit into the broader picture within our portfolio and strategies. It's attending calls and meetings with both our existing and potential new managers, and then obviously participating in the investment committee meetings. So I think the sales pitch here on why join UVIMCO and why this is an interesting role, first I think it's a great opportunity to work on a pretty small and flat team. Our investment team is 16 people total. It's led by our chief investment officer and then 5 managing directors, and we all kind of head or co-head the various parts of the portfolio. And then our team currently has 10 associates and analysts on it. So it's a pretty small group and a pretty flat structure. So even the first year analysts are working, directly with the managing directors, who are the heads of the asset classes, and even directly with our CIO. So it's a lot of great exposure. And you also get to sit across the table from some really world-class investment managers that are interested in having UVA and UVIMCO as an investor. I personally think that's the coolest part of our job. And it's a great opportunity as someone starting out right outside of college. And you also get to learn about, institutional manager selection and due diligence from a team that has a lot of experience and has had a lot of success doing this over the years. So, we will be hiring both interns and full-time analysts. We included a list here of some of the example intern projects that people have done over the past couple of summers. But I think importantly for our internship program, we just want our interns to act as if they were analysts on the team and kind of have the day-to-day experience and role that an analyst would when working with us. So in terms of recruiting information, we will be hiring this fall for both full-time analysts and summer interns to start in the summer of 2021. We're obviously looking for people who are really interested in investing and the markets that have both strong quantitative and qualitative skill sets and have demonstrated that they can be, kind of outgoing, collaborative team players. We don't have the dates yet, but we will be doing on-grounds recruiting. Our jobs will be posted up on Handshake and the dates that we'll be interviewing. But if you are interested in learning more about UVIMCO and either the internship or analyst program, don't hesitate to send me an email. My email is listed there at cfitzmorris@uvimco.org, and I can make sure to put you in touch with the right people on our team.
Caitlin, thank you so much. Also, just a big thank you to each of our company partners for presenting tonight. Now, a reminder to students to please make sure that you submit your questions right now. We're going to move into some Q&A with our company partners, and we will be, but we want to make sure that we address the questions that you particularly have. So the first question I'd like to address to the Clearsight team. The question is, on starting a career on the sell side versus the buy side, what are some considerations in making a decision?
Yeah, that's a great question. I think actually Caitlin did a really great job of kind of dissecting the buy side versus the sell side. So I'm not going to harp on those differentiators too much, but I think that when looking at buy side versus sell side, kind of understanding, the fundamental differences, and then kind of taking it a step further and looking at it firm specifically. So kind of making sure that if you do go buy side, that the kind of the firms that you would be evaluating, doing analysis on, and then potentially investing in are of interest to you personally. And then similar to kind of like for Clearsight example, one of the larger polls that I wanted to go, sell side with Clearsight specifically was our firm's focus, that kind of intersection of software, professional services, and big data. Those are all interesting to me. I don't think I would have gone to do sell side and focused on kind of like in industrials or energy or something like that. So as you're considering kind of doing buy side or sell side, kind of understand the fundamental differences, but also kind of take into consideration the focuses and the nuances of the firm, the culture, and those types of things as well when starting your career.
Great, thank you. Anybody else want to address that from any of the other organizations? If not, we can move on to the next okay.
Sure, David, I'm happy to jump into that because I am
absolutely.
a former sell-sider who's now a buy-sider. But I think the other thing that's important to think about is just the types of training and experience that you'll get in the job, and kind of the fundamental, finance-focused skills that you'd want to develop right out of school. I think the sell side historically has had a great reputation of being a good training ground. And I think as a lot of people in the finance world, career path has progressed. Oftentimes people that start on the sell side eventually make the switch to the buy side. But when they do so, they have a great kind of fundamental base to start from.
Great, thank you, Caitlin. All right, the next question I want to address out, and I'll just look for, a raise of hands, from the group. We're in an extreme volatile, market right now. What does that mean for your business? Is that good? I'm not. Believe me, no one wants us to know what's happening in our market right now happening. But it could be that there's more deals. The investment volatility is good. I'd like to just hear from your respective organizations. What does that mean to the work that you have within your teams?
Yeah, I'd be happy to jump in here. For us at Coleman Research, we deal in information, and right now that's the most important thing for people. So we've actually seen an influx in business, and then we've also seen a little bit of a decline depending on the client. Obviously, a hedge fund is going to react very differently to this than a private equity fund and maybe a mutual fund. But overall, people just kind of want answers, and having the network that we do is really helping them understand what's going on and how this is affecting different industries, from retail to food and beverage to really everything.
Great. Anybody else want to take that? It'd be great to get different perspectives from the different, because we have 4 unique areas represented.
I'll take a swing at it. It's James from Realtor. From our side, it's you can look at it from 2 lenses. As a landlord or owner, it's a little bit tough because your tenants are obviously suffering and having a tough time maybe paying their rent or asking for concessions. But you can also look at it from an opportunistic lens, as a lot of users are going to be strapped for capital or too far indebted, and we have the opportunity to provide them with an influx of short-term capital and maybe get a deal cheaper than we would in normal circumstances. So you look at it from 2 ways.
Yeah, James. Hey guys, Luke here again from Realtor as well. We really view our strategy as riding kind of the winds of e-commerce in a lot of ways, and with a lot of the stay-at-home mandates. E-commerce has been growing, I think 15% the past 5 or so years, but we even see that trend continuing, given the unfortunate circumstances, as a lot of product type that people would generally go to the stores for, produce, groceries, and things like that, people are beginning to buy online, a lot of ways, and out of necessity right now. So we think that even when this pandemic, knock on wood, comes to a pretty quick stop, that we hope that trend of people being more comfortable buying product type they maybe weren't comfortable buying before online, we hope that will continue.
Great, thank you. All right, if no one else wants to address, I'd like to direct a question now to Caitlin. Question came in and said, can you describe your ESG investing efforts?
Sure. So I think this is a growing topic across the investment universe in general right now. I think historically we have not had explicit ESG policies or kind of guidelines in place, but it's something that we definitely take into account in our manager diligence. Obviously we're very focused on generating very long-term, solid returns for the endowment. And I think we firmly believe that the best way to do that is through, sustainable businesses who are going to continue to have strong returns and advantages well into the future. I think this has kind of come up recently in various discussions with UVA as well. We historically look to UVA for guidance on certain policies like this. And so it's an ongoing conversation with us, with UVIMCO and UVA right now in terms of how that's going to be handled going forward. And so I think the message right now is we definitely do incorporate it. We think about it and talk to our managers about it when we're evaluating individual funds, and kind of stay tuned for future announcements and kind of developments there with UVA as well.
Great, thank you. The next question I'd like to address is around the skills that you're looking for. When we look back within the last 3 to 5 years, when firms were recruiting for interns, there was more of an expectation on having more deep finance knowledge, because it was happening later in the recruiting cycle for students. Students were maybe deeper into their 3rd year. Now students are often being recruited already when they're into their 2nd year. So can you maybe just share a little about what skills that you find the most essential in your daily work, and how are you assessing candidates on those skills? And I think maybe say, Jonathan, I saw you kind of, you want to go ahead?
So at least kind of with Clearsight, and kind of as we go through recruiting, and especially how we do our training, we kind of think that as long as, you look at a candidate and they kind of have this willingness to learn, and they kind of have a certain degree of intellectual curiosity, and at least kind of like a fundamental understanding of finance, by no means, as we're recruiting, do we look for kind of like the finance experts of the group. It's more so the candidates that exemplify an intellectual curiosity, because once you start, a lot of the training is kind of, learning on the job. You're usually paired up with a senior analyst, and you kind of do your best to kind of, basically drink through a fire hose and kind of learn as you see them going through the process. So I would say kind of as far as like important skills to have, just kind of an inherent intellectual curiosity, as well as kind of like a fundamental understanding of, finance and related subjects.
Great, thank you. Anybody else like to take that one?
Yeah, I'll jump in. This is Aaron from Coleman Research. And to kind of piggyback off that, I think, what's great about our organization is if you look at a lot of the new grads that we hire, they come from so many different, work experiences and majors. I myself was a teacher before I joined Coleman. We have people that come from poli-sci, your traditional kind of finance backgrounds, social sciences, that kind of thing. And I do think it's all about being interested in the work that we do, and being, like the last speaker mentioned, intellectually curious. Because from our perspective, and Francesca and I touched on this, is the idea that you do get so many projects across so many different industry sectors. I remember my time working with a large consulting client. I would get projects on, a lot of hot button issues, but even things very obscure, different types of supply chains, and, talking to engineers from electric automobile manufacturers, and learning about different types of renewable energy sources. So, I think that from a Coleman perspective, we want somebody that is going to be interested in that kind of research component, is going to be interested in learning about a wide variety of topics, and using that to communicate effectively with stakeholders, and honing in on a lot of those other soft skills that we are looking for, like being interested in learning how to source, learning how to recruit, learning how to manage projects and clients. So I think it all kind of builds off of each other, and I think our training process for new grads does a good job of that.
Great, thank you so much. And this question kind of builds on exactly what we were talking about, in terms of that you don't really require a depth of finance knowledge, but it's more of that intellectual curiosity. How does that translate into the way that you recruit students, necessarily outside of the traditional school path? So we know that with many firms like yourselves, where you recruit heavily at schools that don't have undergraduate business programs. Can you maybe share a little about how you assess candidates that are coming from non-business backgrounds, and how that plays into your recruiting cycles?
I think And yeah, as far as our recruiting go, it's definitely not specifically directed towards the comm school. I think a lot of our events are hosted there just because usually if a student makes an effort to go to the comm school, then they usually have a kind of a fundamental understanding of investment banking and are just kind of more likely to apply because they it's kind of been on their radar for a long time and they kind of want to. But that's by no means kind of like a gating item. As far as kind of like understanding or kind of what we look for, you know, if a candidate doesn't go to the comp school, I think something we tend to look for is kind of like a passion outside of, you know, academics, obviously kind of strong, you know, excelling in coursework, but definitely kind of having a passion and a full resume of something, you know, that's interesting and has demonstrated that they kind of are passionate about this, just something that they like to do over the course of their time as an undergraduate. Because it basically shows that they kind of will dedicate time to something. And if something's important to them, then they'll kind of progress through it during their tenure at UVA.
Great. Looking to see if there's anybody else that want to take that.
Yeah, I'd also add that we're looking, like Aaron said, across all majors and interests. When you're in college, what really matters to us is that, like Aaron had said, that you're intellectually curious. A lot of what we do really is communication based and collaboration based. So those soft skills to us are extremely important as well. And obviously we'll teach you the ins and outs of how our clients do business and how we do business, but we need you to be able to pick up the phone and take that initiative and move a project along at a clip that our clients are working at. As you saw in that first presentation, they're working 9 a.m. to 8 p.m. and we're right there along with them. We're answering emails when we need to be and we're online when we need to be because our clients don't sleep, so sometimes we don't either.
Great, thank you. Well, in closing, I'd like to ask each of you, if you don't mind, the question will be, you know, how you personally, you know, came across your interest in your career in finance, and what tips, you know, and what recommendations would you have for, it could be a second year or third year that is moving into this recruiting cycle. They're moving into this final summer, and they're going to be coming back in the fall, really deep into the recruiting cycle. So again, your experience, what drew you into finance, and then also your tips, you know, for students that are moving into the recruiting cycle. So Caitlin, do you want to take that one first?
Sure, happy to. I think what originally drew me into finance was just really the equity markets. You know, I think I always had an interest in following the markets, and there was something exciting and challenging about trying to figure them out. And so that was kind of, you know, what got me into finance. Originally, I had a circuitous path to UVIMCO that started on the sell side at Goldman Sachs and then at a long short equity hedge fund. And I eventually found my way to business school at UVA and eventually to UVIMCO, which I think ties into, you know, my tip for students going into this recruiting cycle and just trying to figure out your career in general, is to focus really on what interests you and how you like to work and kind of the day-to-day of the job, and find something that is a really good fit for you personally. I think especially in kind of the craziness of the recruiting in the fall, it's very easy to get sucked along into, you know, kind of the funnel that everyone else is in. And it's important to kind of take a look at yourself, know yourself well enough to try and find a company and a role that you think really fits with you personally, because you'll be much more, you'll be much happier there over the longer term.
Great, thank you so much, Caitlin. Francesca, how about you from Coleman?
Yeah, if you would have told me my freshman year of college I was gonna end up in the finance industry, I would have laughed. I was a political science major, and and really what's unique about what we do is we're very much the people side of a finance and numbers based industry. And what drew me to Coleman was the ability to learn about so many different industries and see why people found value in the extrusion of plastic and the different technologies that are coming to our market and the world. And what's kept me here for 3 years is really being able to interact with our clients, all of these insane companies that are really doing some amazing work, whether it's an activist fund or some investment firms and private equity firms, like working with all of them and seeing in the news that they just made an acquisition on a company that we helped them understand more about is really rewarding, and seeing that real world impact for us is why we do what we do.
Great, thank you so much. And Luke, how about you with Realterm?
Sure thing. Specifically to Realterm, and I guess maybe to speak more to real estate finance in general, is a lot of the business is still, a lot of it's human to human. So you're dealing with brokers, you're dealing with sellers, and I felt that in this specific industry, you do have some of the hard financial modeling, but a lot of it is, dealing with other people, which I found appealing. And then just another benefit of the buy side is getting to work with our institutional investors. So not that UVA is one of our investors, but other universities that will put money into us, and then if we do our best to give them a return, and that can provide financial aid, or a cancer foundation that is investing in us. So people, I think, talk a lot about bigger purpose and stuff like that, but I think that's something we see a lot on our end of the business. So I would say those two elements.
Great, and we'll give thank you, Luke. We'll give the closing remarks to Jonathan. Would you like to take and share your experience, why finance, and also what tips you have for students as they move into this summer?
Yeah, definitely. So as far as kind of like why I ended up in finance, I've always kind of been a little bit more analytical. I love kind of picking apart a data set and kind of trying to uncover kind of what insights it has to offer. But at the same time, I kind of really like modeling. I don't know if that's weird. I think it's really fun. But similar to Luke, what Luke was saying, a big piece of investment banking is kind of interacting with people on a day-to-day basis, because you're not only doing the hard skill stuff, but you're pretty much constantly on a day-to-day doing the soft skill stuff. And I think that investment banking has like a fantastic mix of that. And it's kind of like the combination of those two that drove me to investment banking and kind of like finance as a whole. But as far as a tip that I would have, I would say I wouldn't kind of get pigeonholed or kind of get tunnel vision as you're going through the recruiting process. Definitely learn as much as you can about all the fantastic companies that are out there. And then if you kind of feel drawn towards something or a specific industry within finance, or something that's not even finance related, definitely give it a shot, because the more you learn, the more kind of what's out there, and you never know what might interest you.
Thank you. Well said. Well, I'd like to give one big final round of applause and thank you to our company and alumni partners for being on the line tonight. I want to wish everybody health and safety as you move forward. Hopefully we will be back to normal, and you as students, hopefully we'll have you back on grounds very, very soon, because again, like I said at the beginning, we miss you and we want to be back to normal. We appreciate you again, to all of our partners, and we will continue to be in touch. So students, don't hesitate to reach out if you need anything from us in the Career Center. Also to our alumni and company partners, don't hesitate to reach out. We're here to help as well. So all the best. Stay safe.
Thank you.
Sounds good. Bye, everyone. Thank you.
Thanks so much.
Everyone, thank you so much.